Today on PyUncut, we're unpacking one of the most dramatic power shifts unfolding in global markets right now, one that even the most seasoned analysts didn't see coming. Alphabet, the parent company of Google, is in the middle of a rally so explosive that it's rapidly closing in on a $4 trillion market cap, something almost no one expected at the start of the year. And in the process, it's putting serious pressure on Nvidia, the company that practically became the poster child of the AI boom. This isn't a simple tech stock up, tech stock down story. This is a signal of where the next phase of artificial intelligence might be headed. And the implications for investors? Huge. Let's break down what's propelling Alphabet's surge, what's shaking Nvidia, and what long-term investors should really pay attention to during this unprecedented moment. Alphabet's mind-bending run, $1 trillion added in 6 weeks. Alphabet has been on an absolute tear. In just 6 weeks, the company has added $1 trillion in market value, with shares jumping nearly 35% during that stretch. Year to date, it's up an eye-popping 70%, trading around a $3.9 trillion valuation. This kind of market cap acceleration is almost unheard of. Trillion-dollar jumps don't typically happen unless a company launches into an entirely new industry or captures a once-in-a-generation opportunity. And that's exactly what investors believe is happening. The surprising part? This rally isn't about Google search, ads, or even YouTube. Those businesses are strong, but what's powering this surge is Alphabet's position in artificial intelligence. Not just software, not just models, but the entire stack. Models, infrastructure, and even chips. Investors have shifted from asking whether Google can compete in AI to believing Alphabet may dominate the next phase of it. The Gemini breakthrough, a turning point on Wall Street. Alphabet's momentum is driven by the company's newest and most advanced AI system, Gemini. For months, investors wondered whether Google was falling behind in AI development, but with Gemini, sentiment changed almost overnight. Early performance results have been strong enough to reshape the narrative. Gemini isn't being seen as a catch-up model, it's being seen as a leader. And more importantly, it has forced Wall Street to recognize that Alphabet is not behind the AI curve, it is right at the front. This matters because AI isn't just another product category. It's the foundation of every major tech shift happening today. Search, cloud, enterprise automation, video, robotics, creative tools, and semiconductors. Gemini's strong debut has restored confidence in Alphabet's roadmap and positioned the company as a full-stack AI ecosystem. The Buffett stamp of approval. But nothing moves markets like Warren Buffett quietly building a position. Earlier this month, Berkshire Hathaway disclosed a multi-billion-dollar stake in Alphabet, the first time Buffett's firm has ever taken a meaningful position in the company. This is monumental for 2 reasons. 1, Buffett only buys businesses he considers undervalued. Alphabet's valuation, even with its AI infrastructure and cloud presence, has often been seen as modest compared to peers. Berkshire entering the picture signals that Alphabet may still be priced below its true intrinsic value. And 2, Buffett invests in moats that endure for decades. The Oracle of Omaha isn't chasing hype. He's identifying durable, long-term compounders. His team appears to believe Alphabet's AI strategy is not just viable, but dominant. And when Buffett quietly bets billions, institutions follow. The meta shock, a threat to Nvidia's dominance. Alphabet's rally isn't just built on software strength. The most surprising twist is that Meta, one of the largest AI infrastructure spenders in the world, is reportedly exploring Google-designed AI chips as an alternative to Nvidia GPUs. A year ago, such a rumor would have been unthinkable. Nvidia has been the undisputed leader in AI acceleration hardware, holding pricing power like a monopoly. Its chips are the heartbeat of the AI boom. But Meta evaluating Google's in-house chip signals two massive shifts. One, Alphabet is now a credible player in AI hardware. This isn't hobby-level chip design. For Meta to even consider a Google alternative, the performance and energy efficiency must be close to Nvidia's best. And two, Nvidia's dependence on mega-cap buyers introduces risk. Meta, Microsoft, Google, Amazon, OpenAI, they make up the lion's share of global GPU demand. If even one of them diversifies spending, Nvidia's margins and growth trajectory could be affected. Even if Meta never signs a deal, simply being in the conversation elevates Alphabet's standing dramatically. Nvidia's sudden pullback, a foreshadowing. While Alphabet has been surging, Nvidia has suddenly stumbled. Its stock has dropped nearly 10% over the last month, including a sharp fall of more than 5% during the latest trading session. Now let's be clear, Nvidia is still a juggernaut. It's up 25% this year and recently crossed $5 trillion before pulling back. But markets aren't reacting to what Nvidia has done. They're reacting to what might happen next. Increased competition from in-house silicon designed by Alphabet and Amazon, a maturing AI hardware cycle, massive cloud providers pushing for diversified chip sourcing, and now the possibility of Meta shifting even part of its GPU budget. The concern isn't about Nvidia collapsing. The concern is about Nvidia's absolute dominance being challenged for the first time since the AI boom began. For a stock priced for perfection, even a small crack in the armor causes exaggerated moves. Alphabet versus Nvidia, the new $4 trillion race. Alphabet is now within $300 billion of Nvidia's market cap. That's a narrow margin at this scale. For years, Nvidia felt untouchable. Its lead in AI hardware was too great, its demand pipeline too strong. But Wall Street no longer sees the gap as permanent. Two companies, two layers of the AI revolution. Nvidia dominates AI hardware, from GPUs to networking. Alphabet dominates AI software, models, search, cloud, and now emerging silicon. If Nvidia defines the infrastructure behind AI, Alphabet defines how AI is actually used, deployed, and monetized. And the next $1 trillion in market cap may depend on who captures more value from the AI stack. And Alphabet is coming at it from three directions at once: AI models, Gemini, Cloud plus enterprise AI, and in-house AI accelerators. This is the type of multidimensional advantage investors love. Alphabet's wild long-term returns. A quick reminder for context. Alphabet went public in 2004 at roughly $2.13 per share split adjusted. Since then, the stock has delivered approximately 15,000% returns. That means a $1,000 investment at IPO would be worth around $150,000 today. A $10,000 investment would be worth $1.5 million. This is what generational compounders look like. And investors now believe Alphabet's next decade of AI-led growth could rival its first 2 decades of internet-led expansion. What smart investors should watch next? Here are the biggest signals to monitor in the months ahead. 1. Does Meta actually test or adopt Google's chips? Even a pilot program validates hardware credibility. 2. How quickly does Gemini adoption grow? Enterprise rollout will determine real revenue impact. 3. Does Nvidia maintain pricing power? Competition doesn't destroy Nvidia, but it can compress margins. 4. Does Berkshire increase its Alphabet stake? If Buffett doubles down, the market will follow. 5. Can Alphabet sustain momentum past the $4 trillion threshold? Crossing is one thing, holding is another. Final thoughts. Alphabet's surge isn't hype, it's a realignment. Investors now view the company not as a legacy search engine, but as a core architect of the AI economy. From models to chips to cloud-scale infrastructure, Alphabet is inserting itself into every layer of the AI value chain. And while Nvidia, still a dominant force, faces its most credible competitive threat yet, the AI world is no longer a single-player game. If you're investing in the future of AI, the next chapter will be written by the companies that don't just ride the wave, but build the entire ocean. And right now, Alphabet is doing that. This is PyUncut, where we decode markets, technology, and the forces shaping the future.